Happy Halloween, everybody. Good to see so many of you at the conference last week. Beth wanted some Halloween theme colors, so I did a little more harvest gold and such this week. Don't worry, we'll go back to cool colors next week, but this is, celebratory. I wanted to start off just by recognizing how much response disability advocates did across the state in response to the news of the administration eliminating and firing almost all of the workers at the U.S. Department of Education that dealt with special education and rehabilitation services. This is a small sampling of the articles that popped up across the state in response to this issue, and lots of disability advocates like yourselves were quoted. So I just want to recognize that because 2 weeks ago seems a very long time ago. Last Friday, October 24th, it became clear that there was no time to get out November SNAP benefits, even if the government were to reopen. And so some of you who are on Wisconsin's version of SNAP, we call it Food Share in the state, may have started getting messages this week notifying you that November benefits would not be loaded on to EBT cards on November 1st. There is delay. It takes time for the state to communicate with the federal government about who is on food share and how much their benefits are. So last Friday, we knew we weren't going to make it, and even if the government reopened. And just to say how much of an evolving and continuously evolving situation this is, last Friday, the 24th, states got revised guidance from USDA, and they also got more guidance on Saturday afternoon. So what the state has known has been, kind of continually changing, and they have been doing their best to help people understand in real time what's happening. So Wisconsin residents who are on food share will not get more money loaded onto their EBT cards in November because of the government shutdown. There are people who may have a balance where they haven't used all of their food share that they've gotten from previous months. A lot of people try and bank up some funding on their cards to save for special occasions or things like that. DHS has our DHS has tried to clarify that if you have money on your card, it won't be taken away and it will continue to be available. So if you have a balance on your card, you can continue to use that money during the shutdown, but there will be no more money added to the card as long as the shutdown continues. Of course, there are a lot of people who use all of the food share money they get as soon as they get it. So for many people, they have $0 on their EBT cards, and that will be the case until the shutdown ends and until the government can do the work that is necessary to get that funding loaded onto cards. At this point, and we will talk about this in detail, it is unknown when the government shutdown will end. And when the shutdown ends, that does not mean everything just kind of comes online and is as it should be. The government shutting down is not like a light switch. You can't turn it off and then just turn it back on. It's more like a steam engine where you turn it off and it stays off. And when you turn it on, it takes a lot of time for that water to boil and get ready to run. So most of what we're hearing from the food advocacy community is that it may take some time, perhaps to a couple of weeks, for SNAP funding to get to states and onto individuals' card after the shutdown ends. That timeline could be slightly shorter or longer. It's hard to say, but I think the important point is that when the government reopens, that doesn't mean all of the funding that hasn't come to the states just automatically is there. It takes work and people to kind of get to resume business as usual. Also, for folks who are subject to the SNAP work requirements, that is an eligibility criteria to be eligible for the program. So if you are subject to SNAP work requirements, you still need to prove that you've been worked enough to remain eligible for the program. DHS is continuing to take SNAP applications. So if you are eligible for SNAP, apply because you get benefits retroactively. There has been a tremendous amount of coverage in the state about SNAP. We kind of moved from the education department firings directly into this news story. Too many articles to really cover here. I've included two. This was I think front page article for the Journal Sentinel, and again, a person with a disability who did a great job explaining exactly why this is such an issue. For a more national perspective, there's a State Line article that really goes into why food pantries are not a replacement for SNAP assistance. So I mentioned that the guidance from the U.S. Department of Agriculture changed several times to states, including over the course of 24 hours. Here's what the guidance said. USDA said to states, we're not going to reimburse you. We're not going to pay you federal money if you decide to use your own state dollars to cover the cost of food share benefits. That's a big deal. In past shutdowns, when states have continued, operating and running programs that are funded or partially funded with federal dollars, the federal government has always kind of reimbursed the amount of money states laid out to when it reopens. This guidance is saying we're not doing that this time. And that's important because it really is telling states we are handing you a very big disincentive to use any reserves you have because we're telling you you're not getting that money back. And again, states have to have balanced budgets. So for many states, they don't have $111 million, for example, to cover a month of SNAP. And they certainly may not have that on a continual basis. SNAP is 100% federally funded, even though the state does put in some money to administer and run the program. The guidance also said that it would not be, the USDA would not be tapping into the contingency fund, kind of the rainy day fund is another way to think of it. There's, depending on what you read, there's between $5 and $6 billion in this rainy day fund, and that would partially fund November's benefits. I think it costs about $9 billion for 1 month of benefits to go out. The president has been very deliberate in choosing not to use that contingency. And in fact, USDA changed its guidance from September on, I think, the 24th to, in September, they said they would use it. And now that is not the case. Work requirements are still in effect. You can still apply for food share, and that's a big deal because if you're eligible, DHS is still processing and approving applications, and benefits that you should have received for months should come to you when the government reopens, whenever that is. DHS has also put together a food share news page, and that is a good place to go for updates. They are also telling food share members to make sure that their information is up to date in the Access database. So if you have an app or you have can log into the web page or connect via the phone to make sure that your information is correct, that is one of their main vehicles that they will be trying to get out information as things become known. BPDD's national organization, this is kind of the group that represents all of the DD councils across the country and territories, put out this week a memo specifically for people with disabilities who are losing food assistance. Some of the language in here is likely applicable to older adults and other people who may rely on programs like Medicaid or SSI or public housing that have as part of their requirements income and asset limits. The purpose of this memo is there are lots of people with disabilities who rely on food assistance, but there are also rules about what kind of help that you can receive that isn't going to be counted as income or assets, and that may impact your eligibility for other benefit programs that have very strict controls on how much you can earn and how much you can save. So the best practice for people with disabilities to get food assistance is to get food directly from food banks or meal sites. People can buy groceries directly for you. You may get prepared meals from charitable programs. People can put money, if you have an ABLE account, they can contribute money to your ABLE account and you can use that funding for food. If you have any doubts about whether something might be considered a income or an asset, talk to your benefit specialist or case manager before you accept that. And I think the kinds of help that our national organization is particularly flagging are things like cash or checks or gift cards, those kinds of items that are intended to help people buy food who have lost funding from their food assistance programs can be counted as income or assets under federal benefit rules and can put your eligibility for other programs at risk if you accept them. So for people who are on food share, there are some resources to help you find a local food bank or pantry in your area. I think the website from Feeding America is particularly easy to use to search. So you can see, where someplace that is distributing food can go. For those of you who want to help, to food banks, the best mechanism to do that is to donate money directly to your local food bank or pantries. And again, the Feeding America site has, you can find your local food bank or pantry, and then most of them have an online donation capability. A recurring donation, if you're able, is always a nice idea. The reason why money is the best option, and this is what the food folks are saying, is that they can buy food in bulk purchasing at a much lower cost. And they also know what are the kinds of things that people need. And quite frankly, while, items that people acquire and donate are given with, the most charitable intention, when you get lots of things in, it means somebody meaning staff or volunteers, have to inventory what it is, figure out where to put it and store it in inventory. Or sometimes with community food drives, they have to figure out a way to transport that food. And that all takes time. And at this point, there's about a 35 to 40% increase already that's being reported for people visiting food pantries and food banks. So it's important that staff has the ability to serve the folks coming in through the door. One other item is that many people who receive food share are actually already using food pantries and food banks to supplement their food share assistance, because most people receiving food share are not receiving large amounts of money. It's money that is very helpful, but it does not cover the full cost of food. And as we have more fixed income people, some of whom may be on food share, some of whom maybe aren't yet, are finding that food costs are going up and assistance is going down. I think we can expect that the pressure on food banks is going to increase. The coverage nationally has been very clear from food banks. They have been very clear that they cannot replace what SNAP covers. So we really are in an unprecedented situation, and I know those local folks, excuse me, are doing as much as they can to respond in a kind of very new landscape for them. I mentioned earlier that there is a contingency fund for SNAP that is not being used. There are a number of articles out there analyzing, the legality of that. The law actually says that the SNAP contingency fund must be used when regular funding for SNAP runs short, and the plain language of the existing statute is designed so that SNAP funding continues to flow. And that is because it is a food assistance program. So the law was set up so that you are never disrupting money that is intended to prevent hunger. So previously in September, the Trump administration's guidance said it would use that money in the contingency fund to continue paying SNAP benefits. They have changed their mind and their guidance. And so this is a deliberate choice and decision to not use that funding. And there are several reasons why the analysts are saying, wait a minute, that is not that rationale that you can't use it, which is what the administration's new guidance is saying is false. First, because the plain language of the law says so, but also prior administration practice that, this president was president once before, and in his previous administration, we had a shutdown and this funding was used in this way. And as up to a few weeks ago, that was the plan. And previous administrations have set a pattern of using these contingency funds too. So there are a number of states who have looked at the rationale offered by the administration on why specifically they aren't using this funding and are suing to try and prompt the release of the contingency funds to states. Again, this would not cover the full amount of SNAP benefits. It's about 2/3 of what is needed. But if they are successful in court and that funding is released, it would mean that some money would come onto EBT cards in November. The lawsuit has not been decided yet. They have asked for a judge to rule quickly. They were hoping that would happen this week. It looks like we might have news tomorrow on Saturday. So stay tuned. In addition, November 1st is also important to SNAP for a completely separate reason. And it is an important date in terms of what new requirements are in effect for the SNAP program because of the reconciliation bill, HR 1, that was signed into law in July. You might remember that this Congress has already voted to cut $186 billion from SNAP over the next 10 years as part of HR 1. But it also made other changes that either increase the number of people who have to prove they're working or exempt to get benefits. And it also made some changes that increased costs for states while reducing the amount of federal money they get to run the SNAP program. So October 1st, that is when the changes to SNAP work requirements that were part of HR 1 took effect. And HR 1 got rid of some existing exemptions in the law, which means there are now more people that have to prove that they are working. Older adults, there's some debate about when they say 64, does that mean 64 and 364 days or up to 65? But there were exemptions for people who were over age 54. And now we have expanded the age range of people who have to comply with those requirements if they do not have a dependent under the age of 18 that they are caring for in their home. So that we have expanded who has to work, and we have also removed exemptions for homeless people, veterans, youth aging out of foster care, and residents in places with few job opportunities. And the Food Share News page on DHS lists the places that were exempt because there weren't enough jobs in the area. You can see there are 7 counties and 1 city that had those exemptions that now the people living within those jurisdictions are not exempt by virtue of living there. November 1st is important because the federal government wants these changes to happen quickly, and they November 1st is the end of the 120-day, what they call it as a hold harmless period, where that was the amount of time the federal government gave states to kind of make all of these changes. Wisconsin estimates there'll be about 45,000 more people that have to prove they're working, that the removal of those exemptions and those other changes are going to mean 45,000 people who don't have to prove they're working right now will, as of November 1st. And there could be people who are getting food share who are maybe getting communications about those new requirements that they have to do this week as well. That could cause some confusion because obviously there are a lot of things that are happening because of the shutdown, and this change happens to be also occurring at the same time. So you may be getting multiple communications about the same program for different reasons. The November 1st date is important because it means that anyone who isn't correctly proving they're working enough is going to be counted in the state's error rate. And HR 1 made some changes that include some pretty big financial penalties for the states if they have too many errors. Also this week, November 1st is important because it is also the beginning of the open enrollment period for people who have Affordable Care Act marketplace plans. This week, the Wisconsin Office of the Commissioner of Insurance released some estimates about what people might expect when they log on to healthcare.gov to check how much what the premiums for the current plan that they have now are. The benchmark for comparing costs is the silver plan. There's obviously different levels of plans that offer different coverage and also have very different out-of-pocket costs for people. But they kind of compare across silver plans as being the kind of base plan that they expect. These are estimates, and how much your plan costs does depend on age, income, where you live, and what kind of plan that you select. Available insurers in each county is kind of the where you live part. And these estimates are based on if Congress doesn't extend the subsidies as they are now, what would that mean for different types of plan holders in different parts of Wisconsin? The Office of Commission of Insurance also has an online map that people can use to kind of search your county and understand what insurers are offering plans. You may remember that earlier in the fall, there have been a number of current ACA marketplace plan insurers who have decided that they are not going to offer plans at all in certain parts of the state that they have before. And partially, they are citing the uncertainty about whether or not the subsidies stay the same or are changed as being a reason for exiting the market. So you can look up your county and see who is offering marketplace plans. In some places, the plan that you have now may not be offered, or there may be fewer options. Healthcare.gov opened up yesterday. I tried to use the website to search for some rates, and I was unsuccessful, but maybe that won't be your story. Wisconsin is one of 28 states where people use healthcare.gov to enroll in the marketplace plans and make comparisons. Usually healthcare.gov publishes rates far earlier in advance of the open enrollment period. This time they did not make it go live until 3 days before open enrollment. It's also important to remember that what Congress does or doesn't do on ACA subsidies could mean the difference between people being able to afford a silver plan with pretty low deductibles or changing to a lower coverage, higher out-of-pocket cost plan with deductibles that can be thousands of dollars more in the silver plan. If Congress extends or changes the ACA subsidies, and we'll talk about that in our next section, like what are the ideas Congress is considering that might impact who gets a subsidy at all and how much that subsidy is. If there are changes before the end of the year, for people in healthcare.gov states, that administration they're relying on the administration to adjust those rates in a timely way to make decisions about plans. And there are many watchers who are particularly worried that this administration, that has been very public about not supporting Affordable Care Act marketplace plans, might not do any adjustments in a way that helps consumers know what their costs are before that open enrollment period really ends. So there's a couple of pieces of advice here. An article came out yesterday from our friends at Wisconsin Public Radio saying, this is a year where maybe you hold off and don't pick your plan on November 1st. Maybe you wait until closer to the middle or end of the enrollment period to see if anything has changed. All right, Congress. Here we are. Just a little bit of history here. October 1st, we are now on October 31st. This is the longest government shutdown in history. It is because Congress did not pass a continuing resolution or a final 2026 budget by the start of the fiscal year, which was October 1st. It should be noted that the U.S. House has not been in session since September 19th. And we'll get into why that is important in a minute. So for the last 31 days now. The House passed a continuing resolution and set a deadline for November 21st that would have kept funding the same as it is now, and not passed any final final budget language. And it left and it hasn't come back, which means that the only way to reopen the government for the last 4 or 5 weeks, avoid a shutdown or open the government since it's now shut down, has been for the US Senate to simply agree with what the House already did. Since the government shutdown has happened, the administration has taken a number of actions, some of them not legal, and some of them being challenged by the courts. The shutdown, the administration has used the shutdown as a reason to permanently fire a number of federal workers. We talked about the U.S. Department of Education workers, but there were other workers in different departments. They've also moved money Congress appropriated for very different purposes, to fund the military pay for troops. They've now done that twice and they have moved money around for other purposes as well, and decided to open up certain government agencies to do certain things. Yesterday, they opened up USDA, for example, and brought workers back who are not getting paid, to get out $3 billion of aid to farmers, for example. This week, federal workers are missing some of them are missing their second paycheck. There are workers who are paid on a monthly basis, and they are missing a month's worth of pay. The administration is diverting more money for different things to pay the active military, the troops. The Senate has headed home for this weekend, so there will not be a resolution to this shutdown before next week. And on Saturday, we have the ACA Marketplace opening, SNAP funding not being sent to states. There are some programs that rely on government workers to distribute funding. Head Start is one of them. Head Start programs are done on a rolling basis. So like some agencies get their money on October 1st and some get on November 1st. Well, the folks that were going to get their allocation on November 1st will not get it. Essential Air Service funding lapses on November 1st. Among the workers who are not getting paid are air traffic controllers. In past shutdowns, that has been a pressure point. And there are lots of decisions and choices being made by the current administration to choose to pay some federal workers or some functions and make a decision not to find ways to continue other functions. It is clear that we're at November 1st. The deadline the House set way back on September 19th in their continuing resolution expires November 21st. So, reopening the government just by passing the CR the House has already passed only buys you less than 3 weeks of time at this point. And then, we're going into the end of November. So I think it's maybe useful to not go into so much what the arguments are, but to think of 4 groups of people who all have leverage against the other and are all trying to use that leverage to do something else. I'm going to start with the White House. The White House has generally had a pretty big role in resolving conflicts and shutdowns. In past shutdowns, sometimes you will get members of both parties who will kind of form a gang and work out a deal. Sometimes you have the White House that's communicating with Senate and House leaders on how the shutdown is going and trying to come to consensus or agreement or provide opinion. You know, in this case, the White House, the House, and the Senate are all controlled by the same party. So there tends to be more agreement about things when you have members of the same party. But in past shutdowns, when you've had, you know, members from two different parties, it has been typical for the White House to meet with leadership and you know, try and spur on a deal. That is not occurring in this time around. The White House has been using the shutdown as an opportunity to choose which federal workers and which programs to fund or not, and sometimes in violation of federal law. And they've been bypassing Congress and the law to either move money from one purpose for another in a way that they cannot, that under the law they cannot spend it. This is part of a pattern. Since March, the administration has not been consulting Congress with some of its reorganization or its desire to fire certain workers or move money from one program to another or stop funding for certain things and pound it, not get there's been a pattern here where you know, Congress, the power of Congress's purse has really not been a priority for the administration. Some of the decisions that the administration has made, they have chosen to find money to fund the active duty military. The Department of Homeland Security and specifically ICE are fully funded. Early in the shutdown, they said extra money from HR1 could be used. So those workers are funded. There has been a bailout to a foreign country, Argentina, and this has all been done without Congress's action on these fiscal things. There's also been decisions about permanently making firing decisions and not deliberately not funding certain programs, SNAP being the biggest example so far. Last night at around 11 p.m., the president also announced on social media that he thought the Senate should just change its rules. If you've heard the term filibuster, that's the rule they're talking about. And that would mean, just like the reconciliation bill, which you might remember was passed with a simple majority, 50, in that case, 51 votes instead of 60, this would do the same thing, where the Senate would decide that it would get rid of the filibuster so that only a simple majority is needed to pass a bill. So that's kind of where the White House is, and there's lots of commentary about, you know, different nuances of the strategy, but I think the important piece is that the shutdown seems to be perceived as enabling the ability for the administration to act in ways that it wants to further plans that it has. So there may or may not be a huge incentive to end the shutdown. I'm going to move to House Republicans now. September 19th, House Republicans did pass a continuing resolution, and it is now in the position where any language that the Senate negotiates has to pass the House too. So that means that the House is in a strong negotiating position because it can receive something from the Senate and say, no, that's not good enough. We need edits. And we're going to edit it in a way that we like, and then you have to approve our edits. And so that's obviously one way that a shutdown could be extended as Congress goes back and forth with each other. But it also means that if the House continues to stay out of session, no resolution to the shutdown is possible. Because at some point, November 21st comes along, and the logic of passing a continuing resolution that has a very short time window where you may not come to agreement on how to solve problems becomes less and less feasible. We're already at November 1st. So if you pass the continuing resolution good through the 21st, are you going to be able to solve these differences in 20 days? Lots of watchers think that's unlikely. And at the point where the continuing resolution date passes at November 21st, then there really is no way to solve the crisis unless you have a new plan. But there's no new plan necessary, at least from the House's perspective, until that date happens. So as long as they stay out of session, there really isn't a resolution that looks likely. And yesterday evening, Speaker Johnson said, there have been some proposals on can we do standalone bills to fund certain things. And in fact, funding troops was one thing that Congress was interested in doing. The administration said just moved unilaterally and took money that was allocated for other things to cover those bills, so that they kind of took away that solution for Congress. And there have been several bills floated specifically on SNAP to say, hey, can we do a standalone bill to provide funding for just this one thing? Speaker Johnson last night said no, where he was not interested in doing a standalone bill because it was leverage on the Democrats to pass the current CR. So for those of you who are in food share or know people who are, I think it's pretty clear, not only by what members of Congress are saying, but their actions, that people's hunger is being used as political leverage. And that has not happened before. Moving to our Senate Democratic folks, the November 1st open enrollment deadline has always been a point that they think will help people understand the impact of the failure of Congress to extend ACA subsidies and what it's going to mean for individual healthcare costs. They are also continuing to see the administration's choices about which programs to fund or not as evidence that there need to be some guardrails put on so that what Congress says money should be spent on is actually spent on those things. And we've talked about that before as being one of the major reasons why the shutdown is happening, even though publicly the Democrats are emphasizing the expiring ACA subsidies. The other issue is, how do you negotiate on a permanent federal budget if you don't believe that what you pass is actually going to happen? Because the administration is going to continue to make its own choices without Congress. The Senate rule that the president suggested should be changed, the reason Democrats have any ability to talk about different issues in the shutdown is because right now the Senate requires 60 votes. And that preserves the minority powers party, which Democrats are, negotiating power. That rule has been important because our system has been structured so that the people in the minority have a voice. If you change the rule and it becomes a simple minority, then a simple majority, then there are lots of people who are represented in a large part of the country who are represented by people in a minority party who essentially would not have their voices carry forward. Moving to the Senate Republicans, They also are looking at November 1st and the snap lapse as a way to pressure the opposing party to accept the current CR without subsidy extensions and without putting in guardrails. So again, this is all about wanting the same outcome that has not happened in the last 5 weeks. And they also see that there will continue to be more impacts from the shutdown that occur over time. And all of those things are additive, and they think will increase the pressure on the Democratic Party to simply fall in line and vote for the current CR. The Senate has an interest in keeping the 60 vote rule because it spreads the blame for inaction. If it only takes a simple majority, then you really lose the ability to say it's your colleague's fault that things aren't getting done. So many watchers are looking at the president's comments about getting rid of the Senate filibuster rule as actually undermining the negotiations in the Senate that were starting to happen, because nobody wants to get rid of a rule that's kind of keeping their colleagues on the hook. All of this is to say, all 4 of these entities are seeing the shutdown from different leverage points, and they all think that they are in a winning position for different reasons. And that means that there is very little incentive at this point for any of them to change course. November 21st is only 3 weeks away. Now we're starting to hear chatter that the Senate Republicans want to pass they understand they're not going to get to agreement in 3 weeks. So they want to pass another continuing resolution. In other words, move the deadline for new shutdown to either mid-January or March. This is very similar to the argument we had last March, right? The Senate budget committees, who think they want to pass a full year budget bill, want a shorter deadline to increase the pressure that negotiations happen and they can move forward those 12 appropriation bills. But there are also some Republicans, some fiscal conservatives in both the Senate, but more the House, who say, hey, we think a long-term CR is fine because we don't want to spend any more money. And we don't really think that we should pass our 12 appropriation bills if they could increase spending. So there is a brewing fight on even in the solution, what is the deadline that we're setting that will become the next date for the next crisis? Democrats, of course, want commitments that the White House won't continue mass firings of workers and that they won't renege on funding promises that have been made now and the future. And they want subsidies extended. And make sure that Congress's, appropriations are followed. The Republicans have continued to say we're not going to negotiate on subsidies until the government is reopened. And now they're working on their own health care bill that would potentially extend subsidies, at least for a little while, but they would change how those subsidies work, which again throws confusion into the ACA marketplace now that the enrollment period is open. And all of these things, both the Senate and the House have to agree on the identical language. So the U.S. House remaining out of session really is stops any progress on this. And I will tell you that there are several on national calls, several Washington, D.C. lobbyists for various advocacy groups are saying that the Senate is not coming in, or the House is not coming into session, specifically because the Speaker is choosing not to seat an elected representative who was elected, I believe, in September in the state of Arizona. because that future member who has not been seated, so she has been elected, but doesn't have, she's not a member of Congress because she hasn't been seated. Specifically because she said that she would be the 218th signature on the resolution that would release the Epstein files. So some of you may have seen that in reporting or seen that as a rumor as to why the House continues to be out of session. It appears that is what we are hearing from some of our DC insider folks as well. And if that is truly the reason, that is another wrinkle in how do you get the Senate or the House to come into session to solve this problem if they're not in session because they're trying to avoid, something else. We've talked about this a little bit. It's a recap, a good article. I think that some of the actions that we've seen in the past month are really reinforcing some of the concerns that Democrats and some Republicans have had with how the administration has chosen to conduct, to move money around and spend or not spend funding for the past 9 months. And it really does put a finer point on, this tension with the shutdown is how do you pass spending bills without without knowing whether that deal will be honored. There's also been a lot of discussion about the Office of Management and Budget Director, who is widely seen as being, the strategist responsible for deciding, how to move money around or which workers to potentially fire, etc. So if you want a longer read, it's here. I think what's important is the Office of Management and Budget has some really significant things that it does. And this is the office that has really been cited as the nerve center for making decisions about what funding is frozen or impounded, what funding is moved, how to use failure to spend funds by a certain date as a way to stop those funds from being spent, pocket rescissions. And this has also been the part of the government that has gone back to Congress and asked for rescissions to deappropriate money that Congress promised should be spent for certain purposes. We talked a little bit about what it will take for the government to reopen, that it is not a toggle switch that simply flips on. This is a pretty good article from National Public Radio that not only lists kind of some of the major categories, but goes state by state. They didn't have a section on Wisconsin, but there were other states that are trying to track the coming impacts of the shutdown. And I think what's important for folks to remember is that the federal government pays out its bills on different dates. We've already seen a couple of pay dates for different kinds of federal workers go by, and those workers haven't gotten paid. There are also monthly allocations like SNAP that go to states and then to individuals. Some funding like Medicaid is distributed quarterly. Sometimes there are programs that distribute money to kind of on a staggered basis. Head Start is an example of that, where some Head Start groups get funding in October and some different ones that are on the November schedule. As we go on, more and more of those dates are going to pass, and the impact will ramp up for more and more different things. There are programs that have run out of funds already. There are programs that have funds now, but there's a date when those funds will run out. There are some programs that have funding, but they rely on workers who are not there to get that funding distributed. Head Start is an example of that. And as we've discussed, even when the government's reopened, that funding may be delayed because it'll take time for the federal government to restart and catch up, and for states to get the information needed to the federal government so that they can do their job and distribute funding. Moving to the Affordable Care Act now, the National Organization for the Office for Insurance Commissioners has been fairly clear all year, but we covered it in our last webinar, I think, that there is actually a time frame to act on the subsidies, and we have passed it now. So the reason to worry about the uncertainty that remains because Congress has not acted is now people are really in the position where they have to make decisions about healthcare for next year within a certain time frame, and they're doing it with incomplete information or with information that could change. If Congress had acted, frankly, in HR 1, right? This expiring deadline and subsidy crisis is a choice that Congress has made. They chose not to do that. They did not include extending this particular subsidy in their tax bill, that they signed July 4th. And they haven't included it in any subsequent action yet. Congress has really missed their opportunity to make the decisions that were necessary early enough so that states could adjust their rates and their markets and make sure that people who are trying to figure out what plan to enroll in know what their cost is. You can see from the analysis that Wisconsin did this week, as well as if you go to Kaiser Family Foundation that does a lot of healthcare reporting, they've been very consistent that without the subsidies, costs are going to rise significantly for people. It isn't the only reason that costs are rising. Healthcare costs have gone up, and there have been other changes because of HR 1 to the ACA marketplace that are driving up costs as well. But subsidies are a big reason, the expiration of subsidies is a big reason why you're seeing such big increases in premiums. If a deal on subsidies comes out in November or December, there are states that might scramble to update their rates, but it is going to take a lot of time, and it may not happen soon enough before consumers have made their decisions. And remember, there are consumers who are healthy who may make the decision to take a risk and go uninsured, which is going to drive up the costs even more because the people who use healthcare or need healthcare the most tend to scramble to find a way to stay in it. So there's a real concern that you will have lots of people who are the lower cost people in the pool just simply leave the pool, or people who need lots of care who end up having to take a plan that doesn't cover as much or requires a lot more money out of their pocket, because they simply don't know, they simply are in a place where they have to make a decision. Wisconsin is on healthcare.gov. Any adjustments that affect the subsidies in those states would depend on the current administration to make the adjustments in healthcare.gov. And there are a number of folks that are very worried that might not happen, or it might not happen in a timely enough basis to help people who are trying to figure out what plans to enroll in. Meanwhile, Congress keeps repeating some similar ideas about extending the subsidies and changing how the subsidies work. So there is a bill that House Republicans put out that says, let's just do the same thing we're doing now for a year. That has no traction to go forward. The conversation and ideas that are being repeated, remember Medicaid cuts, where you started to hear the same ideas being repeated over time, that kind of tells us what are the things that are continually being brought up, what are the real ideas. And there appear to be a set of 4 or 5 things. So Congress isn't thinking about extending the subsidies as they are now, which of course throws more uncertainty into states that are trying to figure out how to adjust their rates, because they don't know what the rules are going to be, if the rules are going to change, right? And these are kind of the 4 ideas that we keep hearing most about. Income verification sounds a lot like more paperwork, that if people make a mistake might cost them tax credit money. This is a technique, and we see it in Medicaid, where you add more paperwork or more things that people have to do and have to prove, and it becomes harder for everyone to do that correctly. We've heard about new income limits pretty consistently. So that would mean that if you I think the credits got extended to up to 400% of the federal poverty level. Well, if you change that to 200% of the poverty level, there are lots of people who are in the ACA marketplace who are below 200%, but it means that there are some people who were eligible for credits who wouldn't be, right? That's the mechanism of changing who ends up being eligible for credits based on their income. There has been a consistent idea about requiring everybody to have a minimum out-of-pocket premium, so that would eliminate the idea of $0 cost plans in order to use the insurance. And we'll talk about why that idea is in the mix in a moment. And I think probably the most impactful idea is saying, well, we'll let people who have the subsidies right now keep them as they are, but anybody new coming into the marketplace doesn't get that at all. Whether they get anything is a different question, and the answer may be no. Usually the way this is called a grandfathering clause. Usually the way that works is that the people who are in the program now continue as it is, and then the new people entering the program have very different rules, and sometimes none of the benefits that the grandfathering folks have. The reason why this is the most impactful is that health insurance tends to be something that has a lot of churn, right? And people who are in ACA marketplace plans are there because they have an employer who doesn't offer an employer-sponsored plan, like they might work for a small employer or work for themselves. Well, if you get a different job that has employer-sponsored insurance, you're out of the marketplace. There are also a lot of people who have, employer-sponsored insurance. If they lose a job, marketplace becomes one of their options. Well, if the rules change and you're not in marketplace now, but you need to be in the future, you won't get the same tax credits under that provision. So it has a lot of impact, because unlike a lot of programs where people stay in the same program for a long period of time, that is not functionally how health insurance works. There's always a lot of change as people move from job to job, or they move from Medicaid to marketplace, or marketplace back down. This would mean that anytime if you have subsidy right now, anytime that you make a change and you're not in marketplace anymore, you would not get subsidies if you came back in. So why are we talking about minimum premiums? You're going to start hearing Republicans saying things and using some talking points. And one of the talking points that is being repeated is that the Affordable Care Act marketplaces are riddled with fraud. This is a similar talking point that we heard about Medicaid, frankly, in the spring. And specifically, the Paragon Health Institute, and you may remember, if that's a familiar name, it's because they have also issued a lot of reports about Medicaid, and were also saying that Medicaid had a lot of fraud and promoting certain kinds of ideas to change Medicaid. Well, they're also promoting some ideas here for the marketplace. That report is claiming that there are too many plans where nobody uses the plan all year. And they are saying that that means insurance brokers are signing people up who don't exist or don't qualify or have other insurance or don't need ACA coverage. So there's some fraud happening. But that isn't really proven by the numbers. Perhaps that occurs in some cases. But a lot of health policy people say it's also not unusual for healthy people to not use their health insurance. And you actually need a lot of those people who are not making claims to offset people who are using their healthcare insurance and are getting care. The other rhetorical point that you're starting to hear again, and if it sounds familiar, it's because it is, oh, we need to repeal and replace Obamacare or the Affordable Care Act with something different and better. We've heard this since 2010. This has been a kind of continual kind of drumbeat of rhetoric from the Republicans. And Speaker Johnson has once again said, well, you know, the marketplace is too expensive. The law didn't do what it should. We should replace it with something else. And he referenced a 2024 policy blueprint that had a number of ideas, like that contained what they think their ideas are for something different. It's notable that that policy blueprint would repeal some of the things that people like about the Affordable Care Act the most, specifically the prohibition against insurers denying coverage or charging more to people with pre-existing conditions, which was a really big deal for a lot of older adults and people with disabilities. Another idea in that blueprint is to convert Medicaid into block grants, which we talked about extensively this spring as a idea that really would dramatically reduce the amount of federal dollars supporting Medicaid and likely result in many more people in Medicaid losing their coverage. So if you are a person who says we would like the federal government to spend less, those reforms probably would do that. But it would also mean that there will be a lot more people without health insurance. And so as you kind of hear in the news, you know, these ideas that there's fraud in the ACA marketplace, or we need to do something different and better, understand that those statements have been repeated over time, and in this case, over 15 years, and that some of the ideas that they are elevating to be replacements really would not necessarily be what people with disabilities would benefit from. Just as a point to that idea that Obamacare is too expensive, well, healthcare is expensive, and this article kind of shows that, you know, the different kinds of coverage that people have, either through the marketplace or an employer-sponsored plan or Medicaid or Medicare, their costs are not that different. Medicare is a little higher, but that also serves people who are older, many people who are older than age 65, or people with disabilities who are duly eligible for Medicaid and Medicare. And those people tend to have higher health needs and higher health costs. So just as you hear the talking points of how expensive Obamacare is, understand that it's healthcare that's expensive, and that, you know, no matter what kind of coverage you have, you are likely to be paying a high cost. So what do you do about all of these things that are starting to happen? We talked a little bit last time about people's ability to open a constituent case with their U.S. representative and 2 U.S. senators. And that's still a good idea. It's helpful for lawmakers to understand what the impact is to average people's daily lives when the federal government is not working, is either, furloughed or certain programs are being stopped. It's helpful for them to understand that, and it is part of their job to help or to help resolve constituent issues. So this document is available online, and you can share it and do a screenshot. But it's a helpful tool for folks who are looking for ways to engage with their lawmakers and talk about what the shutdown or different changes at federal agencies are meaning to them. And of course, the way out of the shutdown is congressional action. It is not enough at this point to ask for them to end the shutdown. Because as we've kind of explained before, like, we are in a pattern here where there isn't really an incentive to do anything differently right now than what's being done. And moving the deadline on when the next shutdown could occur isn't actually helpful to resolve the underlying problems on why the shutdown is happening now. So it's, you can ask for the shutdown to end, but that isn't quite enough. Congress has to make sure another shutdown doesn't occur. And the best way to do that is to pass their regular budget and make sure that the funds that Congress appropriates are being spent as directed and in a timely manner by the administration. So you can make that ask to your 2 U.S. senators and your U.S. representative. Moving to the administration, this was a front page article in the New York Times, and we talked about this executive order in July when it was first issued. You may remember that in July, the president issued an executive order that essentially linked homeless people to crime and really encouraged states to make it easier to involuntarily commit people. In other words, take away their civil rights so that they could be put in places in long-term institutional settings for humane treatment was the language in the executive order. That was notable for several reasons, because it is a departure from how we have been evolving and as a way to, in thinking about people's civil rights and how do you help people who need help, and also just understanding that the homeless population, the biggest populations of people who are homeless are actually families, and the biggest growing population are older adults, which makes some sense since there are so many people on fixed incomes that are now having a harder and harder time as costs rise up. There are also a lot of people with disabilities who are homeless, and that includes people with mental health issues, which a lot of folks associate with homelessness, but also many other people with disabilities. Again, another population that often is on a fixed income and required to have low income and assets. So Utah is kind of moving towards this model that is outlined in the executive order, and they have plans to build an institution where they can put homeless people. It is outside of Salt Lake City near the airport with apparently no roads or sidewalks or public transportation to get to it. And the plan is not only will they put homeless people there, but they will also involuntarily treat them for mental health or substance abuse issues. And it's being touted as a model for other states. Obviously, there are a lot of advocates who say this is really a departure from housing first policy, and it is a model that relies on people's rights being taken away from them and the state having power to act on them. Lots of things are unclear about this proposal, but it does look like it is a pretty, the plans at least are to house a lot of people there. 1,300 people, 400 beds for psychiatric treatment. This is a state that has very limited psychiatric beds, which is true for lots of places. So, Utah's legislature has not added money for mental health beds is this a substitute is a good question. And then 400 beds for substance abuse. And how would people get in this facility? It does seem like one of the major proponents of the plan is to say law enforcement, who would be looking for homeless people and give them a choice of going to this facility or going to jail. And there is active conversation about, yeah, to do this plan, you would need to make it a lot easier to commit people involuntarily. Lots of coverage about the elimination of workers working for the Office of Special Education and Rehabilitative Services. So if you're looking for a deeper dive into what national advocates are saying on that, here's some articles. One thing that came out this week is that all of those workers who were fired in the shutdown are now in a limbo situation. There was a lawsuit filed to say, hey, the administration shouldn't be permanently firing people in a shutdown. And this Tuesday, a federal judge ruled that, that shouldn't happen while the lawsuit is playing out. Okay. The ruling said, did say that she found the cuts were kind of arbitrary and politically motivated, which is highly unusual for a judge to say in a ruling. But it's important to know that this isn't over yet. The firings have been blocked for now, but there is an ongoing lawsuit and ongoing appeals, and it is uncertain how that ruling would come out. And it is also uncertain that even if the ruling said, no, you shouldn't fire those people, that the administration would not pursue a different pathway to do the same things. So it is a pause. And we saw this in March when there were many employees fired by the then Office of or Department of Government Efficiency. We saw many court cases that trickled out over a period of months. And some of those cases resulted in people getting their old jobs back. And some of those cases did not. And some of those cases, people got their jobs back and then were fired later. Meanwhile, this week, there was also coverage of, more plans that the administration wants to kind of dissolve the Department of Education and move parts of it to other federal agencies. If this is familiar to you, it is because it was included not only in Project 2025 as a plan, but also we looked at the president's budget proposal, which came out in May, and there were very similar kinds of indications that that this is a goal for them. Now, Congress is the one that has the authority to create, move, or get rid of federal agencies. However, the past 9 months, we have seen multiple agencies kind of be dissolved without Congress. And Congress has thus far not objected to that. There are pieces of legislation, and IDEA is one of them, and budget lines that specifically reference the U.S. Department of Education in federal statute. So there's a real reason why you would want Congress to be the ones to think about, okay, if we make this change, what other changes do we need to make to make sure the money follows and is administered by the right places. There's also an advantage when you have legislation. That is your way to have public input on what changes are made. I would also note that even though the firings of the U.S. Office of Special Education and Rehab Services employees have happened during the shutdown and are currently part of litigation, generally, when programs are moved, the staff is moved with it because those people have expertise in doing the thing the agency does, right? They have expertise in law, in the program, and they generally move with it. So one flag is that this pattern of we're going to fire the people who are doing things first, and then we are going to move the pieces elsewhere later is not following the pattern of most reforms, where you would have a plan that is vetted and has buy-in and passes through Congress, and then you are moving maybe fewer people, but you are moving the people who do the things to the new agencies. There's also, we covered this a few weeks ago, HUD is also moving, changing how some funding can be spent. In this case, they're doing a different way. There's an existing grant program, and they want to change how money is spent and how much money can be spent through the application process, the grant process. So they'll change, what you're applying for, and tell you that you have to spend your money differently and how much you can spend through that process. There are a number of Republicans that are pretty concerned about HUD's plan to change this particular grant. It's called Continuum of Care Grant. And we talked about the potential implications a few weeks ago of what it would mean to cap funding for permanent housing and move funds from permanent housing to more transitional housing that also would include new work requirements. Specifically, these lawmakers are worried that changes to the program would impact people with disabilities and as well as seniors. So while there isn't a resolution here, and while the government shutdown has actually delayed that notice of funding going out, there are members of Congress who are saying, wait a minute, maybe we should delay those changes. A big article in the Washington Post: if you have had trouble getting assistance from Social Security, you are not alone. And this is, if you've had engagement with Social Security that hasn't been very helpful, that's another opportunity to open a constituent case with your lawmakers. Some other coverage here. The Postal Service is not affected by the government shutdown because it kind of has its own revenue stream. However, that doesn't mean there haven't been changes made recently that impact U.S. Postal Service. And some election watchers are worried that the new policies could delay when mail is postmarked and when it is actually delivered in a way that could impact absentee ballots being counted. Also, and we covered this in May, the Social Security data has been kind of married with a Department of Homeland Security database that is intended to verify whether or not somebody is a citizen. And this article is pretty in-depth in pointing out that a lot of the times the Social Security information is outdated or incomplete, especially for people who are naturalized citizens. So they're pointing out that the agreement doesn't have any real parameters about accuracy or security or even who has access to the information and how it can be used. But it does seem like this could be used in a way where there could be mistakes made simply because the information in one database is outdated. This is a pretty big article that is talking about the federal government being interested in testing new technology as a way for people to prove, Medicaid participants to prove they are working. Again, this is being talked about in the vein of implementing HR 1. Medicaid work requirements were part of that. And it isn't clear what technology the pilots were testing or how many people were participating or any outcomes of the tests. And it certainly wasn't being tested on Medicaid. In one state did say, well, we're testing it, but we're testing it on a smaller program that already has defined work requirements. which was SNAP. It does look like the tools that are being tested only verify income, and all of the other exemptions or all of the other ways that you can get up to 80 hours that aren't necessarily paid work weren't part of the app here. So, it's very unclear if we are in a moment where there's going to be some promise of technology being a solution that is really an incomplete solution that's going to result in mistakes. But lots of advocates are quite concerned that these pilots are being touted as a way that states will be able to help folks prove your working requirements, and they aren't actually going to be helpful in doing that. Another article that some of you may find interesting, this is specifically about how states are using technology and algorithms and tweaking, the rules of those algorithms in ways that really mean far more or far fewer people end up being eligible for Medicaid. There is a series of private vendors who are in charge of creating those algorithms and rules, and they're often advising states on how to set the parameters and telling states what other states are doing to either limit or allow more people into those programs. There was a report done that studied 5 states' algorithms, and to no one's surprise, the algorithms missed some people that needed care, sometimes by a lot, and also got used as a way to justify eligibility decisions. Here's a link to the actual report. And again, in this new landscape where you have a lot more pressure on Medicaid programs because there are incoming cuts, we have talked a lot about one of the ways that you reduce costs is to choose to serve fewer people or only people with certain kinds of care needs and not others. And automation kind of helps states make the process seem objective, and it gets pitched as a very consistent and reliable way to determine the right people who need services. But this report is saying something different, which is it's a tool that actually has a political motive and a economic motive, and it doesn't necessarily reflect accurately who are the folks that actually need care. In other news, the ongoing care crisis continues. We've talked a number of times about how many immigrant workers there are who are care workers, and that current immigration policies were expected to have an impact and reduce the amount of people in this workforce. That is happening. The policies that have been put in place are reducing the supply of home care workers in a field that already had too few workers. And what that is meaning is if you wanted to private pay, your costs are going up because there's a lot of demand now, because there's a lot more people who need in-home care and a lot fewer workers to do it. And of course, if you are in Medicaid, you feel that even more because you don't have the opportunity to private pay and pay your workers more. You have to pay what the Medicaid rates say. So this article is being pretty clear about the impact that the rising prices and lack of workers will have. And you can see they are flat out saying this is going to lead to more people being institutionalized or family caregivers dropping out of the workforce because there's no one else. Meanwhile, in North Carolina, we have covered that state's preemptive cuts to Medicaid before HR 1 has even been implemented. They cut their provider rates kind of across the board, as well as made some other changes to cancel contracts and leave positions unfilled. And now, a month later, those providers are really feeling the impact of those cuts. And now state lawmakers are kind of doing one of those, hey, you shouldn't, just because we didn't give you the money that you asked for to keep services the same, now we're mad. We're mad about the impacts of these cuts. Advocates, on the other hand, are being pretty clear about, they know what the consequences of these cuts are and why they've happened. And I think this article does a really nice job. I will point out it is a chair of a state developmental disability council quoted here, of really putting into context like the reality of what these cuts mean. And he does it in a really, really great way of saying, hey, these are the workers I rely on. This is the cut that went into their paycheck because of what you didn't do. And that's how much what it means in their lives. And I'm a person who understands why they would need a different job, but yet I need them to keep their job. California is also in a place where they are starting to worry about what the impact of future Medicaid cuts is going to do to their current state budget. Remember, states have different timelines on which they do their budgets, and it looks like from this article that there may be some activity in the next few weeks that may mean less money to families for care. And in ways that they cannot prepare for right now, because it is unclear what the state will decide to do. It is clear that the state's general fund is not going to be enough to make up the anticipated loss of federal funding. So again, as we continue to cover the impacts of HR 1, remember that it's kind of rolling out in different timeframes and in different places and in different ways from now until, who knows. Again, the 50 billion rural health fund that we have talked about several times, it does look like the application process is identifying specific policy goals that it wishes to see in states' applications. I believe those applications are due in November 1st or 5th soon. So this fund is not actually going to backfill any of the operating revenue or kind of daily bill costs that rural hospitals are going to experience. It is trying to put money into new innovative ways to invest, to either bring in staffing temporarily or to implement technologies that will save money through efficiency. And you can see here, I'll let you identify yourself, that the policy goals are pretty specific in terms of what kinds of projects they're looking to fund. I'm not sure if all of our rural healthcare friends would say that those are the first things that they would invest in to address the problems and the daily needs that they see. And last article, we've talked a lot about food share, but again, the impacts from HR 1 are also occurring at the same time as impacts from the government shutdown right now. And this is an article that is saying, hey, there are a lot of people who are going to lose their eligibility for benefits at all because of changes from HR 1. And that's this week. I'm sorry, there was a lot to go through.
We only had a couple questions. They were answered. They were very simple. So I think we're good to go.